All right, check. All right, I did this much earlier in the day, but it's time to do it again because YouTube didn't end up saving what I streamed before. But this will be part two to the June 1st market review, um, or previous weekly market review as well as market projection for the next week. So we're just going to start off by looking at um, micro gold futures again, and we're just going to do the recap for the previous week. So we're gonna go into replay mode, start new, and treat this as if it was last uh, Sunday and I'm looking at the market, right? So obviously I would label previous week's high here, previous week's low there. Looking at the market, just imagining this is like what I was looking at. I I would be more likely to look for sells or just for us to get to a lower price in the market. The reason why is because we're dead in the center of this large March range. And so I'm looking for more so lower prices because it already made a failed attempt to try to get back to March high, right? So I'm looking for lower prices. That's slightly bearish bias. However, this is a bit of a choppy market on the weekly. There isn't a really like clear inefficiency. So I'm keeping that in mind. Let's go down to the daily. Again, imagining this is like the Sunday before last week's price action. And I'm looking at this and I see we already used this daily SIBI here. Previous week's high is right here and excuse me, previous week's low is down here. So I will have labeled that low, labeled this high. It went Tuesday, Wednesday. So it's likely that again this will be a choppy week. Why? Because if it's a bullish week or a bearish week or a very inefficient omni like present market, I want it to go directly towards a larger time frame liquidity area with inefficiencies created, right? No inefficiencies in the last week. So again, I'm expecting it to be a little bit choppy, and making the low after the previous day, making the high of the week is just another sign of it being choppy. Okay, sort of like the same process that we go about when we think about whether or not it's an inefficient like um, uh, low resistance liquidity run versus a high resistance liquidity run. We want to trade in low resistance liquidity run conditions, i.e., we are making efficiencies as we go towards our intended liquidity area. Okay, so previous week high here, um, cool. Previous week low there. So now we go to our entry time frame, and again we pretend that it's last Sunday. We have also labeled previous weeks or previous day's high, previous day's low here, or rather, sorry, that was Thursday. Previous day high here, previous day low here. All right, where I'm circling. So I'm not gonna label it right now just because it's a lot of work, but I'll point out literally like when we're doing when I'm looking at the market for the week, I label that, I label that, and then I put alerts on both because these are the prime areas where I want to see how the market reacts, whether or not we get an inefficiency that forms there. All right, so immediately as soon as the market opens that Sunday, we create a 15-minute BISI over it, right? So technically, like I said, I want to see the market come down, but I wouldn't be surprised if we go and take out that high of the previous week's high now that we created a large 15-minute BISI overlapping the previous day high, right? So we have 15-minute BISI right here, all right? So then we see if we get an entry. I'm automatically setting a buy limit order because I'm thinking, okay, maybe it'll take out this buy side before we start to go down. All right. Let me just, all right, 20. Okay, I want to see if it wants to give me the entry so that I can go here. All right, 1 to 2, that's good enough. All right, I see. Wait a minute. We also take out Thursday's high right here, right? So let me just down here. This would be, I know it says Wednesday on the bottom left, but this would be the open of Thursday's candle, right? So this is Asia session, which is the first session for every daily candle. We have the high here. We create another 15-minute BC right here. So now I'm like, all right, boom. We got another 15-minute BC. And once we get that right here, I'm going to test to see how much it would be. And just visually looking at it, I would not take this 15-minute busy. Why? I want my trades to be at least 2R. I'm not looking to risk the amount that I'm risking just to make one reward from it. So I'm automatically like just turned off from even taking the buy trade, even if it is pointing upward. So personally, like you'll see, which is why I didn't put too many messages in the Discord this week. Wasn't really ideal for me to even like try to go for these liquidity areas, right? So we can still have this label, but personally, because I see we took out this high, which is a little bit more substantial than this high right here. Why? Because Friday was an inside day. Why? Because this high was higher than this high, and this low was lower than this low. So I'm like, all right, my eyes are gravitating towards how do we react here at this 15-minute BC here, right? So we got the 15-minute BC there. I'm not really looking to take the trade up anymore, but it's likely that it will go up from here. Um, let's see how it reacts. All right, now it becomes a 15-minute inversion fair value gap, right? So automatically, I'm like, okay, this is likely actually to start bleeding down from here after taking out this high. However, it could very well, because it's so close to this high right here, this previous week's high, it could go up here. So I'm sort of at a stalemate. Additionally, just because look, it's a choppy market still, so I decided to like not really trade as much this past week. I barely took trades. I took like 2 trades this past week. Didn't even put it in the Discord just because it was so choppy. But now I'm looking at this and I see, all right, we inverted it, so it's pointing downward. I want to see if now we can get to the previous day's low from here. Um, yeah, so let's see if we get an entry. All right, we end up getting an entry. All right, and then we invert the fair value gap again. So now it becomes a reclaimed, um, excuse me, it becomes at this candle, if you look at the bottom, the 7:30 a.m. EST candle, it becomes a reclaimed 15-minute BISI. And then right immediately after, 30 minutes after, it becomes a reclaimed inversion fair value gap. So you see, we just created a balanced price range here. This is this is like this is just not really ideal to trade. You could just go back and forth, switching your bias depending on how it reacts here, right? So you would have taken, or I would have taken, um, let's say a trade right there, stopped out for like 10 points. Trade right here, stopped out for 10 points. A trade right here again, downward. Sorry, no. Yeah, I would have taken one trade right here, one trade right here, one trade up here to go up, and then another trade right here. That's four trades off of this one fair value gap trying to trade during choppy price action. The thing with that though is we would have amounted to about 1 R loss. And then, all right. Yeah, literally nothing. Literally nothing. So that's how you know we shouldn't have even been in this market at all. And the reason why is because look, we get to this major previous day high, right? Remember, this is the previous day high that we're focused on, and a 15-minute BISI overlaps it. And then as the 15-minute BISI overlaps it, we create a balanced price range as soon as we go back into it. I wouldn't have wanted to trade this at all, right? It shows you rule number one. Balanced price range forms at your indicated highs or lows, not a good day to trade. That's what the system tells us. All right. So Monday is also a holiday, so you didn't even really want to trade on the bank holiday anyway because it was a shortened day, which means that liquidity will dry up. So again, we're still focused on previous day high here, previous day low here. Okay. So Tuesday, market opens. We're just meandering. We want to see how we react at the previous day high or low. All right. And if you were paying attention to the original 15-minute BISI that formed, overlapping this high here, right? Because this is Friday's high right here. You'll have seen we inverted it and created an inversion for value gap right here at the bottom of the new week opening gap. And so you could have taken that as a trade, taken a short trade here. Um, 20-point stop loss. And where are we targeting, right? We can either do that same day's low, or we can do the previous week's low, which I'm circling around here, right? It's previous week's low. So you target that. It's about a almost a 3 to 1, 2.7 to 1. And now we see how it wants to react. And just so choppy, like so extremely choppy. And do we get stopped out there? Yep, we get stopped out. So we wouldn't have even been able to trade during this choppy market anyway, right? So again, you see like this is, and the reason you know that it would be choppy is you just look at our entry time frame right now and look how it doesn't leave behind inefficiencies. It just keeps trading back and forth in the same range, right? So personally, I didn't trade any of this because it was just way too choppy. Um, even though eventually you'll see we will have been right that it will have gotten down. We see that Wednesday's open occurs, and finally after Wednesday's open, we go down and we take the previous week's low, right? So now we're looking at the previous week's low. Mind you, these are all trade ideas that we looked at, but we didn't take. Why? Because we're following our rules, and our rules recognize that when the market is choppy on our entry time frame, we do not enter trades, right? So that's the previous week's low that I'm circling right here. If you look all the way to the right, what is that? That's overlapping the previous week's low, a 15-minute SIBI sell side inefficiency or sell side imbalance, buy side inefficiency here, right? All right, 15-minute SIBI right there. Cool. So now we already took the previous week's low, right? And the larger bias is that we want to see even lower prices, right? So what's the next lower price after the previous week's low? What I would have done is I would have looked at the daily candle, and I will have seen the very next low after that is this low over here from March 30th. I will have labeled it at 44.45 right here, right? So that was already taken right there. 15-minute SIBI, right? So now I'm saying, okay, do we get, actually, wait, it's just moving kind of slow. So yeah, now honestly, actually, what I'm looking for is, do we get all the way down here to this low here, which is 43.69 or 43, yeah, 43.69. So I label that, and now I want to take sells to 43.69. Okay, and we see we get the entry there, and the day closes. We don't really make money off of the trade. Why? Because it gets all the way down here, right? And although it gets down here, it doesn't go all the way down to 43.69. So we ended up taking a break even, taking this trade from the previous week's low to the next possible sell side liquidity area. Okay. So one break even so far in the week. Now we have this 15-minute SIBI here. It's still valid because it overlaps the previous week's low. However, Wednesday opens up, we create a large new day opening gap, not a new week opening gap, but a new day opening gap, right? And as soon as we get this up close candle on our entry time frame, 15-minute, this 15-minute SIBI becomes a 15-minute inversion fair value gap, right? So now, remember, I'm still looking for lower prices, but it's possible that this can be used as a reversal PD array to at the very least take some buy side liquidity. Now, what do we have here? We have Wednesday's low, which is labeled here, and then we have Wednesday's high, which is labeled here. So what I'm looking to do is to see if I can take this inversion fair value gap from the entry here at the one level, or one Fibonacci gradient level, or the top of the 15-minute inversion fair value gap, up to buy side or the high of the previous day's candle, which is Wednesday's candle, right? So as soon as I see a market open for Thursdays, because this would technically be Thursday's daily open, I'm setting a buy limit order right here, and I'm targeting buy side for Wednesday, right? Really, really simple. It's the same exact setup every single time. Do we get a gap that forms overlapping a previous day high or low or previous week's high or low? And does it invert or does it stay as like in the same direction of the bias? If it inverts, then we want to see if we can take a short-term liquidity area in the opposite direction. So next short-term liquidity area is quite literally that high. You can also put it at the low of the new week opening gap, which would also be valid, but want to see if we get all the way up there. Hmm. Or if we even get the entry, We don't know if we're gonna get the entry. So what actually ends up happening is we invert this, we re-invert the 15-minute inversion fair value gap, and we end up actually closing the trade at minus 11. The reason why is because at this candle here at 9:15 p.m. EST on Wednesday night, what we do is we reinvert it, and as soon as we reinvert it, this no longer points towards buy side liquidity. This now points towards sell side liquidity. So now I'm zoning in on Wednesday's low. Are we going to take Wednesday's low? As soon as we get that candle formation at 9:15 p.m. EST on Wednesday night, I'm immediately setting the sell limit order to go to our low. All right. And boom, we get knocked into the trade immediately. And it becomes a 2.6 to 1. All right. And we end up taking that win finally Wednesday night. Right. So now we have two trades. Sorry, we have three trades. And we have the one where we didn't make anything from Wednesday and we didn't do anything. Because we would have been knocked out of the trade at 4:15 anyway. So it would have been like a just a break even trade. Then here we took the small loss at the re-inversion of the 15-minute um, inversion fair value gap turned reclaimed BISI, or sorry, reclaimed SIBI. And so we took that trade, we ended up winning, right? So now we're looking to see how are we going to react here at Wednesday's low, okay? And if you look at what happens, we take Wednesday's low. As soon as we take Wednesday's low, which is at this here 11:45 p.m. candle, we see that immediately what's overlapping that complex is a 15-minute SIBI here. So we're going to label the 15-minute SIBI. Again, y'all, it's the same exact thing. We pay attention to the highs or lows, or the extreme points, or the really key points of our internal range liquidity areas. Sorry, it's a little slow. Right? So now this is a 15-minute SIBI. Right? So I see we formed that SIBI there, and I'm like, all right, cool. We're continuing to take sell side liquidity. I want to see if I can target the original thing, which is 43.63, which is the next sell side target down here, right? We'd end up making a 2 to 1, just about. I'm doing the calculation in my head. It would just be about a 2 to 1. As soon as we get that, we immediately get an entry here on the 12 a.m. candle for Thursday. And so let's see if we get all the way down there. And we actually end up inverting it. When we invert it, this 15-minute SIBI now becomes an inversion fair value gap, right? So then we enter here, right? Then we get a re-inversion of it, right? Balanced price range created here. And now we take the trade off. And now we lose like, I don't know, it was something like 5 points right? And then now since we reinverted it, now we want to get into a trade to sell side, right? And you see this right here, this right here, it reinverts it again. So now it becomes a 15-minute reclaimed inversion fair value gap. This right here, the creation of this balance price range overlapping the gaps at our key liquidity areas that we pay attention to is yet another signal. This is a choppy market. It's it's not going to produce the results of a quick in and then out. You will have to continually enter, exit using our trading system. Now, you can do that, and I mean, if you are willing to put your emotions aside, you can do that, and then you can see you would end up actually making, you'd end up actually being correct and making at least to, I believe this is like a 9-to-1 trade if you would have stayed in all the way here. But the very fact of us doing back and forth, will just create the conditions for your mental capital to be drained. And that's not really what we're looking for, especially in a choppy market or in a market that doesn't really have the intentions to go exactly towards a target, right? And we know that because of how the daily market or the daily chart looks, but also how our entry time frame looks. There's no inefficiencies that are being left behind. All inefficiencies are being traded back into and completely refilled, and that's just not an ideal market. However, at the same time, if you want it to be this way, you want it to somehow encode this trading program, you would see it still works. You would just have to be willing to be in and out and in and out and in and out of these trades based on the system here, right? So that would technically be it just for me, I didn't take this trade. I didn't even look at it because we just kept going back and forth, reinverting the same gap. But that would have won right there. Right? And then Thursday happens the way that it is. We end up um, creating another 15-minute busy, overlapping another major liquidity area. What is that major liquidity area? It would be Wednesday's low, right? This is acting a little slow. Go. All right, so computer's acting a little slow, so I'm just gonna talk about what I see. At the 12:15 candle that I'm hovering over right here, you can see on the bottom where it is. I'm like going over it. That's a 15-minute BISI. Why is that an important BISI for us to label? Because it's overlapping Wednesday's high right here, which we would have labeled. So I labeled a 15-minute BISI, and because we already took the previous week's low, and then we created a 15-minute inversion fair value gap that we ended up using, I want to see, all right, are we going to go to the opposite weekly liquidity area, which is the 518 or the May 18th weekly high. From there, so Friday candle opens here. We enter the trade there and just doing the calculation. It would have taken a long ass time to use that BISI to go all the way up to the area, but the trade would have worked out. You would have been able to make about a 1 to 3 or 3 to 1, depending on how you do risk reward risk calculation. Um, the thing about this is, right, we just pointed out all of these winning trades. You would have lost so much mental capital trying to trade this just because of how choppy it was. There was no clear like there the while the system still worked, right? The thing about this is you would have had to re-enter, re-exit, re-enter 4 or 5 times on 3 different trades throughout this week in order to actually start making money off of it. And that takes a toll on your ability to actually read what's going on in the market. So that's why like for weeks like this, I don't really put like any of the trade ideas that I see exactly because it's confusing when you have an inefficiency that forms at your area of interest, and then it inverts it not once, but twice or three times. This just shows you again, like the system absolutely 100% works. Um, and I mean, it's you trade at your own risk. I'm not a financial advisor. I'm not trading for anyone. This is just all for the purpose of learning and seeing like what it is that we see the market does and how it moves algorithmically. But yeah, we see um, those trades would have worked for the week. Didn't take them because I didn't like how efficient this market is. I want to see inefficiencies directly fast in the direction of what I see, right? So um, let's get out of replay mode. Um, Friday's candle closes, and on our entry time frame, we close below this major 15-minute um, busy turned inversion fair value gap. So as soon as market opens on Sunday for the start of Monday's daily candle, I'm going to be entering the trade sell. This is not financial advice. I'm not telling you what to do, but I'm going to be entering the trade or setting a sell limit order right here to enter to at the very least take out this previous day's low. Again, like I said before, I think I'm looking for June to be a bullish month. And if it is a bullish month, as we know, markets that run in the direction, like directly towards liquidity in the way that I like to trade it, it'll establish its low, one of the extremes, either the lower or high in the first week. And then in the fourth week, it'll establish its last extreme, which is the lower high, or the opposite liquidity from whatever it established in the week one. So yeah, that is the review for micro gold futures. Just go into MNQ for a bit. So wasn't really paying attention to MNQ before because of how disgusting it was. At the time, I was also just trying to focus on one market at a time. But as we can see, since April, sorry, my computer's just my computer's just really slow right now. Okay, since April, this market has just been going up and up and up and up, right? So this would have been really good to trade, but I was paying attention to one at a time. Now that I have a better bearing of exactly what the system is, right? I think it's fair for me to be able to pay attention to both micro gold as well as NQ. I'm going to be looking at both this week. And by looking at both, I just mean I'm going to set my alerts at these highs and lows and at these internal range liquidity areas, i.e. the new week opening gaps, and see how it reacts on my entry time frame on the 15-minute, whether it gives me a BISI, SIBI, or it inverts either of those things. I mean, whether it's in alignment with my bias. I'm biased that both are bullish for the month of June. So we shall see how things end up formulating because this market is probabilistic. You need to trade with probabilism. I don't even know if that's a word, but you need to trade probabilities basically. So yeah, we can see obviously this previous week was bullish for this is the weekly chart by the way. This previous week was bullish. We go down to the daily. We're just gonna real quick look at this. Um, all right, when we look at Monday's candle after the new week opening gap forms right here. Or Tuesday, this would be Tuesday's candle. Wednesday candle closes, and so we form a daily buy side imbalance, sell side inefficiency between this candle's low and actually this candle's close because that's a gap there. So we want to include the gap in the buy side imbalance, sell side inefficiency here that we would draw out. So that we obviously would have seen this was a major area that we could have traded from. We go down to our entry time frame just to see if there was any trades. And lo and behold, we had two really, really beautiful setups that established itself. One of them was here. As soon as the market opened on that Sunday, last Sunday, it created a 15-minute BISI that overlapped the previous week's high here that I'm like labeling or I'm circling around. We don't get the entry from this 15-minute BISI until Tuesday, early morning at London session. We enter here with a 50-point stop loss. 50 points is equal to about the same risk of 20 points on gold. We enter it here. We target the previous day's high, and that would have been a trade of, let me see, how much would that have been? 764 to 989, about a 200-point win, with a 50-point stop loss. Would have been about a 1 to 4. So it would have been a great trade. We have previous day's low here, previous day's high here. When we're looking at Wednesday's daily candle. For the previous day high, we don't really get an inefficiency here. We get actually balanced price range, right? So when there's no trade there on Wednesday, we're still looking at Tuesday's low versus Tuesday's high here. Sorry, it actually would have been Tuesday's low according to that candle to Tuesday's high here. So we looked, and then boom, Wednesday's candle opens. So now we're looking at Wednesday's low and Wednesday's high. We get a 15-minute SIBI that forms and overlaps Wednesday's low. So now we see maybe we want to take sells here. We end up taking sells here. We take a loss because it inverts it. I mean, we would have taken a loss before it inverted it, but we take that loss, it inverts it, and then immediately as soon as it inverts it, because obviously we're in a bullish market, and we have created, remember what I said before, on Thursday, we will have seen, oh, a daily SIBI, or sorry, a daily BISI has been created. So we have a 15-minute SIBI that becomes inverted at the top of a daily BISI and becomes a bullish inversion fair value gap at the top of that daily BISI. We end up taking the inversion fair value gap, and then we take at least a 1 to 9 trade from there. Um, Targeting at the very least the previous day's high. We wouldn't have gotten all the way up there, but we wouldn't have even needed to because it omnidirectionally moved up from our entry here after market open on Thursday. So I know it can be a little hard to like see it without me pictographically drawing it, but I just wanted to redo this because I already spent an hour earlier today drawing everything out and it just didn't save. But I wanted to show you literally we had a trade on um, Tuesday and Thursday, and that would have been enough. That would have been way more than what most people make using the smallest leverage, one micro contract at that. So let's really lock in on the system. The system works. This is not financial advice. Definitely do your own due diligence, test it out yourself. But this live stream is to help you streamline and understanding. It's a very simple process of where we're looking for trades and what we're looking for in order to enter trades and what we're looking for in order to manually exit trades, right? As well as where are the points where we just want to start just taking the profit, right? So I hope this helps. Again, if you have any questions, you have any concerns, anything you need to say, definitely reach out to me. Send me questions in the Discord. If you're not in my Discord, you can put a message under this live stream. But I appreciate you like lending your eyes. And if you have any questions, again, just ask me. I hope y'all have a good rest of your week and definitely just get prepared for the next trading week. Um, yeah, peace out.